What's up guys, it's your boy Freddy here, and today I have a special video for you guys. I'm looking to cover Chinese stocks and why I believe it'll be some of the best performing stocks in 2025 and 2026. Now, if you guys haven't already, go ahead and check out my trading Discord. If you guys are looking to level up your trading skills and maximize your portfolio gains, I post daily market analysis. I do short-term and long-term setups. The link will be in the description below, so go ahead and check that out. Now, I want to take you guys all back to 2020 when the COVID pandemic first happened. If you guys look at a stock like PDD, which is a Chinese stock, it has recovered very nicely after lockdowns eased. You can see it went from $20 to $200, over 1000% return in less than 2 years. And a lot of these Chinese stocks showed the same characteristic, whether it be Alibaba, Baidu, JD, right? All these stocks showed massive returns in the period of 2 years. And much of this can be attributed to Chinese state media calling on local investors to pour money into markets, assuring them that the economy is recovering from the coronavirus pandemic and the country is headed for a period of great prosperity. But over the last 3 or 4 years, stocks like Alibaba has been pummeled week after week after week after week. And that leaves a lot of investors, giving up on Chinese stocks. And every time a trader has been convinced that Alibaba is about to break out, JD is about to break out, a specific Chinese stock is about to break out, it tanks 20% overnight. It tanks 10% overnight. And a lot of investors have given up on these stocks up until recently. So I want to take you back a few years ago to see exactly what happened and what caused this multi-year meltdown in a lot of these Chinese stocks. And the reason was because China started to crack down on big tech companies on concerns that they were becoming too large and too powerful. And you can see here, China crackdown on tech companies was a 2-year campaign that targeted Alibaba, Tencent, Didi, and other major tech companies. The crackdown was part of a broader shift towards authoritarianism and socialism with Chinese characteristic. So, as you remember, Alibaba was fined 2.8 billion for market dominance. Companies were forced to appoint state-nominated directors. The crackdown changed corporate governance in China's tech sector. It hurt the tech industry, and it also hurt the wealth of many tech company founders that caused a lot of people to pull out of the stock market because they were not convinced that China was going to support the growth of many of these tech companies. At the same time, China faced a real estate crisis, and it was a financial crisis that began in 2021 and was triggered by the default of Evergrande Group, which is a major Chinese real estate company. And some of the causes were overbuilding, right? Developers were building more houses than buyers could purchase, low interest rates, tightening regulations. And what happened was it caused a lot of unfinished projects. Construction projects were left unfinished and loss of investor confidence. And the real estate market in China absolutely collapsed. And at the same time, China was facing a skyrocketing youth unemployment up to 20% in 2022 and 2023. And you can see amid tech crackdowns, the real estate crisis, the skyrocketing unemployment, the Chinese economy was in shambles. And the Chinese government since then has taken steps to boost the economy with stimulus. You can see here that the policymakers have since late September cut interest rates and announced broad stimulus plans. Details on highly anticipated fiscal support won't come until mid-March. So we're going to be awaiting that in about a month. But I think the nail in the coffin for the Chinese government to fostering a more supportive environment for tech companies is the release of DeepSeek AI. And DeepSeek AI really shook up a lot of these US tech companies where they were thinking that China didn't actually have to spend as much money to build a very powerful AI model. And that is exactly what happened here. And in latest news, China's Xi urges entrepreneurs to show their talents in sign of support for private businesses. This is a complete 180 from their 2-year crackdown of big tech companies on concern that they were growing too big. You can see here it says it is time for private enterprises and private entrepreneurs to show their talents. This is coming right after the release of DeepSeek AI. China is realizing that in order to win the war against the US, they need to be strong technologically. They need to be strong in AI. And that is exactly what they're realizing here. You can see that the meeting can mark a symbolic turn for Chinese tech sector after years of heightened scrutiny. It could mean that the regulatory overhang that we have had for the past 2 years or so is at an end. Most recently, a lot of these investors have started to buy up Chinese stocks, and most recently, Xiaomi smashed annual delivery targets ahead of schedule. A lot of these investors are starting to buy up Xiaomi, right? Xiaomi is one of the biggest smartphone makers in the country. They've also started making cars as well, and is skyrocketed over 100% over the past year. Alibaba recently released news to invest 52.4 billion in cloud and AI infrastructure. Shares hit 3-year high. This is a complete 180 from the way it was trading 3 years ago. 3 years ago, Alibaba, every time it got a small little pop here and there, it tanked 10% the next week. Small little pop here and there, tanked another 20%. In 2025, it made almost a 100% return in less than 2 months. This is the new characteristic of Chinese stocks. And I believe that they are still very, very undervalued in terms of price to earnings ratio compared to a lot of these US tech companies. I believe that there is huge potential for these Chinese stocks over the next couple of years. And not only that, right? There are still very, very undervalued tech companies that has not participated in the run so far. And one of these companies is Baidu. Baidu has been getting very much into AI, developing their own AI models, and it has not seen the run that we've seen in Alibaba and Xiaomi. And so I believe that this is one of the best companies to go after right now. The PE ratio is sitting at 9.75, which is very, very undervalued. And even with companies like PDD, right? You can see in 2020, 2021, it had this huge run up, had a multi-year correction, and now a lot of these investors are starting to buy up these Chinese tech companies. We're seeing a symmetrical triangle that is due for a breakout in 2025 and 2026. So there you have it. Hope you guys enjoyed this video. Let me know in the comment section down below what you guys think about Chinese tech companies. Is it a buy? Is it a sell? Or are you guys staying on the sidelines waiting for more information to come? If you guys enjoyed this video, give it a thumbs up, give me a follow, and I will see you guys in the next video. Peace.